Samson MOW, welcome on, man.
Thanks for having me, guys.
So, Samson, just before we started recording, you were telling us about how Max Keiser stepped in a giant pile of something smelly. Can you fill us in? I'm going to be completely honest. I've kind of not been paying attention to Twitter in the last couple of days, and I did hear a bit about this Tether Gold stablecoin thing. Can you fill us in, our audience, about what did Max Keiser step in and why is he getting canceled right now?
Cyber hornets are out and about, it sounds like.
Sure. So I think one of the guys answered your question, what should you ask me? And one of the questions was Tether Gold. And I believe that was prompted by Max a couple days back. I saw it maybe yesterday or something like that, but he tweeted like, if you can't get Bitcoin, you should get Tether Gold or move to another jurisdiction, something along those lines. And I believe that was triggering a lot of people because it looked like a shill tweet. So people were questioning what he's going on about. That's my understanding. I don't know it much better than you guys, but
it's funny. There's like a confluence of things because one of the questions we sent you dealt with commodity-backed stablecoins, and it had nothing to do with Keiser. It actually, the origin was you on with Saifedean. Mm-hmm. You brought up the idea of commodity-backed stablecoins, and you and him went back and forth about Tether Gold, namely.
Yeah.
The main thing that comes to mind and the root of my question was, I think as you're steel manning your Bitcoin position, one of the questions you ask is like, what sort of monetary technologies could threaten the sort of predictability and scarcity of the discovery of digital scarcity? What has the potential to be transportable and have the velocity that the 21st century requires while still enabling scarcity? And one of the answers certainly could be a viable commodity-backed stablecoin. What are your thoughts in general on them? And in a way, maybe threat's not the right term, but is it the type of thing that could slow down or threaten Bitcoin adoption or offer a viable alternative?
So I don't think a commodity-backed stablecoin would threaten Bitcoin. It would actually be better for Bitcoin. So on the Saifedean pod and a couple other pods, I've talked about this concept before of commodity stables. But it comes down to, what are we trading Bitcoin against? And does it make sense what we trade Bitcoin against? So right now, the most dominant pair in the world is USD BTC or BTC USD. So that is really like, it goes to show we live in a petrodollar Bitcoin world, but we need to go back to trading value against value. So that would be Bitcoin against commodities. And I believe a commodity-based stable is the next evolution in that. And the most dominant one right now is Tether Gold. So I'm not necessarily shilling Tether Gold, but that is the biggest one from the biggest stablecoin issuer right now.
Yeah.
And there are a number of others. I did an interview also on Kitco News, and they're basically a news channel evolved from Kitco, which deals in precious metals and whatnot. But they've also done their own commodity-backed stable. But of course, it's not very well known because they don't have the network effects that Tether does. Yeah.
Sorry, I was just going to say, it's interesting that this is kind of coming around again, because I know this isn't the first time that there's been the idea of having a cryptocurrency backed by gold. And that was, after I discovered Bitcoin in 2017, one of the first interesting things I discovered next was one of these, and I can't remember off the top of my head what it was, but it made a ton of sense to me because my background is I was a huge gold bug until I discovered Bitcoin. And melding those two worlds at that time in 2017 made a ton of sense to me. But I think what I've learned since then is that the centralization of any kind of commodity is the problem. I mean, if you could turn gold digital and send it at the speed of light to Europe or China or somewhere else, then Bitcoin might have a problem. But the fact that you can't do that and you have to trust some entity to tell you, yeah, this gold exists and we verified it, and you have to trust the auditors and all of that. Correct me if you disagree, but I don't really see how in the long term that has any real issue for Bitcoin.
Like, you mean as a challenger to Bitcoin?
As a challenger, exactly.
Yeah, definitely. I would say none of these things challenge Bitcoin, but they are things that facilitate hyperbitcoinization. So if you think about hyperbitcoinization, we can define it as the point at which we are all just sitting in Bitcoin and there's no need to trade back into dollars or even a gold coin or whatever. Then that's that's the final state, right? We just use Bitcoin as money. It's global and it's the universal currency. But to get there, there are going to be a number of things that have to happen. And one of those things is trading commodities for Bitcoin. So nation states and I think a lot of the global south, they are in the predicament they are in because they sell their precious metals and their oil reserves or whatever for fiat currencies. And if you look at Africa in large part, the CFA franc is the reason why they're in poverty, because the money supply is controlled by France. And France uses that same money to buy their valuable commodities. So in a way, they're looting the nation. So I think making that switch to a commodity Bitcoin trade is the way to go. And I think a natural evolution of that step is to have commodity-backed stables. And it also makes more sense in general too. If you're trying to trade Bitcoin for something, you don't want to trade it for seashells. And in my view, fiat currencies are basically seashells. At least trade it for gold, which is scarce. And I do have a level of respect for gold. That's why I can appreciate Bitcoin. At least that was my connection early on, that it is like gold-like, but better. But
Right.
at least I think we all understand that gold is not going anywhere. It's had thousands of years of history, and it's very much entrenched in the hierarchy of human value of things on the planet, right?
Yeah.
So I do think there's a place for it. And like you said, there are defects of it, right? Because it's not Bitcoin, the value is not native to the protocol itself.
Right.
You have to wrap it somehow. But as we've seen from stablecoins based on fiat currencies, there is a value to that. So somebody in Latin America can still derive some value from Tether, even though it's based off of a inflationary currency that people can print, right? They're still seeking something to anchor to from their own native currencies, which are inflating even more rapidly. So there's sort of a hierarchy of things that you want in the world. And the dollar right now, I would say, is just a unit of account and medium of exchange, right? But it is still the dominant unit of account and the dominant medium of exchange on the planet right now. So people are trying to seek refuge in that based on their devaluing currencies back home. So there is a way that we can use these things to accelerate hyper-Bitcoinization. But there's more to it than that. I don't know if you guys want to interject, but I can go into more about why.
That's exactly what I was going to ask you, which is, you sound like you have a view of the trajectory to hyper-Bitcoinization. So could you give us the high-level view of what you believe that is? So if you think these commodity-backed stablecoins could potentially be the next step, what is it you see potentially after that leading to hyper-Bitcoinization?
And one piece of background, Samson, before you jump in, we on this show often do describe stablecoins as like Bitcoin scaffolding. Like you can't build a mega structure without scaffolding. And when you think about how many people are cut off from the banking system, how many people are in need of financial infrastructure, to presume that people in Venezuela aren't going to need access to US dollars is just naive. You're probably living in the Western first world, right? So we do have that conviction, even though we're as ardently Bitcoin maxi as you can kind of get. We're realistic about that. Someone that's had a big impact on our view on that is Mauricio Di Bartolomeo from Leiden. We've had him on a couple times and kind of explaining that predicament, which I've heard you kind of hint at this, tee off on Josh's question.
So yeah, I believe that stablecoins are a mid-step to hyper-Bitcoinization. So until they go away, having them on a blockchain and ideally on the Liquid network, which is a Bitcoin sidechain that does not have any shitcoins in it, is the best case scenario that we have. Because as we're talking about, people do seek that dollar denominated value anywhere in the world, and to deny that is kind of it's a pipe dream, right? They're going to look for dollars no matter what we talk about and no matter how much we want them to take Bitcoin. It's just a fact of life right now, especially for merchants that have to pay suppliers in dollars, right? We can weather the volatility, but someone else taking a 30% hit in profits or dollar profits is going to be in a bad place if they need to pay their suppliers and they're just ecking by. But I think eventually they will go away. And like Paulo Arduino from Tether has said the same thing too. Like, even though he is the CTO of Tether, the biggest stablecoin with, I don't know, 70 billion AUM, he also thinks that this is also going to go away because he believes in a Bitcoin future. So it's interesting to look at like everyone's thinking and perspectives on this thing. A lot of us view it simply as a mechanism to get us where we're going to go. And having run an exchange in the past, I used to be the CEO of BTC China. You kind of understand any tool that you can give to people to help onboard them into Bitcoin is a good thing. Running an exchange, the most difficult part of the business is maintaining banking, actually. It's gotten a lot better now, but back in the early days of Bitcoin, like I would say, basically from start until maybe 2017, that was probably a very difficult period for most exchanges to maintain their bank accounts and provide the ability to onboard people to Bitcoin. And I would say stablecoins have definitely had an impact on that, right? So in effect, you've externalized an exchange balance, tokenized it, and made it accessible and really easy for people to get. And that made it less important to maintain those banking relationships and bank accounts. And you could look at a number of crypto exchanges as being spawned from Tether, basically. Like Binance could not exist without stablecoins, right? They're built on top of Tether, effectively. Same with a number of other exchanges that were crypto only at Genesis. But I would say that has made the banking sector react because they've kind of realized, people don't really need us anymore. So they've opened up, and you've seen, quote unquote, crypto friendly banks emerge. And I would say definitely stablecoins have prompted that. It's just pure market competition. They either have to offer services or they're just going to be obsolete because people will just use Tether.
Right. I'm actually going to read a quote of yours. This is from your Bitcoin Magazine article, and it applies directly to what you just said. It goes as follows. If you want to onboard more people onto Bitcoin, you need to interface with their bank account. And for many in the developing world, their bank accounts are increasingly denominated in USDT. So essentially, this is what you're saying of, we talked about commodity-backed stablecoins in general. We could call them the gateway drug into Bitcoin, right? Like if you're into one, then you're going to see the value proposition of the true apex predator in the ecosystem, which is Bitcoin.
Yeah.
And I think, Josh, you said it, and then you piggybacked, Samson, is that even Tether Gold, which we're not talking shit about, the three of us agree there's probably certainly value in it because there's value in gold, but it's an abstraction on top of the underlying, right? So who's controlling Tether Gold? Someone. Who's controlling base layer Bitcoin? No one. There's a big freaking difference there. And that's, I think, going to become increasingly apparent as people better understand Bitcoin as the years and decades trot on.
Yeah. It was interesting. I had a Twitter discussion with a guy, I think he's from Korea, but I think he was upset and asking, like, what do you think about Tether Gold? Because, Max has now fallen from grace and he's no longer following Max. And I kind of laid out what I think. And, everything that's not Bitcoin is imperfect. So he was saying, like, should BTC maxis use Tether Gold? Well, BTC maxis or anybody should use whatever they can to get Bitcoin, whether it is a stable coin, whether it's Tether Gold, or whether it's working for somebody else or using electricity to mine Bitcoin. But everything has counterparty risk. Everything has some sort of risk to it, right? Like there's no perfect way to get Bitcoin without some sort of interaction with some third party. But once you're in Bitcoin, you're good. But before that stage, you have to do something. So if you're using Tether, of course, there is risk because you're using a product from a company. If you're mining Bitcoin, you still have to invest and you have to host them somewhere, and they may not be under your own lock and guard. If you're earning Bitcoin, which I guess is the most pure way, you still have to trust that the guy is going to pay you at the end of the day. So there's no perfect way to get Bitcoin. There is always some form of interaction with somebody else, and that means there's some risk to getting Bitcoin, right?
Yeah.
Yeah.
Along this path to hyper-Bitcoinization, I think inevitably we all see the fact that CBDCs are going to be a thing. I was wondering if you could give us some commentary about this here, about this Nigerian central bank CBDC, the e-Naira. Is it Naira? E-Naira?
I think it's Naira, but
Naira?
Yeah.
Either way. I thought it was interesting because I think they have the highest adoption rate of Bitcoin in the world right now in Nigeria. And the statistics I was reading was like 96% of people are using Bitcoin, and it's a complete failure. This central bank digital currency they tried to prop up, people just basically disregarded it and had a very good understanding of like what is good, solid, hard money and what isn't. that's really cool to see that happening in a country that has been, just plagued by currency problems for so long. To see these people understand the value proposition that Bitcoin offers, even in the face of this new digital currency, which is the same thing that they've had time and time again in a paper version. They've understood that. Where do you see CBDCs kind of fitting in the scope of hyper-Bitcoinization?
They don't. I've said it time and time again. A CBDC is nothing new. We already have digital money. It's in your PayPal account, your Venmo account, and whatnot. It's just this is
except that it introduces entirely new control methods and just ways for the state to reach its fingers into your pockets even more. And I think, the three of us agree that CBDCs are nothing new, and they're much worse than the current position we have, which is at least you have some control over your money, or there's an intermediary between the government and your money with your bank, hopefully. I think that's all, saying only, not reality, but at least no one's actually controlling your bank account right now. Like, they're not telling you what you can spend your money on, what you can't. And I think when people do get a real good view of exactly what that means, like in China, what they're dealing with right now, when your COVID pass is now red and you're not allowed to spend money and you're locked in your house and you have no ability to control your own life because they have complete control over it.
Yeah.
It's a shit show.
Yeah. I think the best thing a CBDC is for is to allow a central bank to enforce monetary policy directly at the user level, right? Negative interest rates, freezing accounts, incentivizing spending and velocity of money, and also surveillance, right? So none of these things that are good for them are good for the people. But like we saw in Nigeria, it's interesting you brought that up. There's only 0.5% adoption of it. So you can see in a free market, nobody wants to use this. Right. They can say it's convenient and it's good and it's safe and whatnot all they want. But at the end of the day, people want cash-like properties, whether it's Bitcoin or if it's physical dollars, right? Or even better still is not better, but even better than a CBDC is PayPal or whatever. At least you're one level removed from the government, right? They need to tell PayPal, freeze this account, or tell a bank, freeze this account. But once you just remove all the checks and balances, you see that things can get dark pretty fast. Like in Canada, the government wanted to freeze bank accounts that donated to the truckers, right? They at least had to go to the banks and say, freeze Dan's account. But if it's a central bank, then they don't even need to do that one step, right? This is no recourse whatsoever.
Right.
But I want to also continue a bit more about commodity-backed stables. And it ties into CBDCs a bit. So I would say stablecoins issued by private companies are already doing the same thing as CBDC, right? It's digital money, but they're better because there is a requirement on them to report and actually have the reserves, right? So all the stablecoin issuers have to publish attestations, and none of them can actually print out of thin air, or else they'd be clamped down on pretty quickly. But you don't have that with a central bank, so that doesn't solve the problem of money printing. And the other thing about commodity stables is that they are subject to that same requirement, where the issuer of Tether Gold, they have to produce attestations, they have to actually have the gold. But the key here is that I believe commodity stable is a step up, because they can promote physical delivery. So Tether Gold, they can deliver anywhere in Switzerland by mail. There's a big strong gold culture in Switzerland. I don't know if you've been, but there's shops on the street that sell gold coins. But the idea of money and cash and gold is very much entrenched in their society. So I think physical delivery is really important, because the traditional gold markets have kind of spiraled out of control. Darren Feinstein tweeted a couple months ago that you probably have about 200 plus ounces of paper gold to 1 ounce of physical gold right now in the current markets. So I see commodity stables and things like Tether Gold as a solution to that, because one, you have physical delivery, and two, it is actually 1-to-1, and the markets are actually better too. So if you're trading Tether Gold on cryptocurrency exchanges, it is a 24/7 market, and there's no stopping of trading. But you do have that on the traditional gold markets, like the metals exchange in London, right? When nickel price was fluctuating, they said, stop trading nickel. Just like when Vitalik said, stop trading Ethereum at a DAO hack. But you don't have that. So it's superior because it is audited, it is reported, and there are checks and balances, and you have physical delivery and 24/7 trading. And one thing we don't want to get into with Bitcoin, and it's less of an issue for Bitcoin than it is for gold, is that we don't want the paper Bitcoin markets to suppress the price of Bitcoin. And that is doable right now. Like if you're trading Bitcoin, say on BitMEX, right? Someone tweeted this a while ago, I forgot who, but if you're trading on BitMEX, you have to, if you want to short Bitcoin, you have to at least deposit 1 Bitcoin, and then you can short it, with 10x leverage or whatever you're willing to risk. But at least you have to have 1 Bitcoin. But on dollar-backed derivatives markets, you could just short it indefinitely because paper money is infinite, especially if you're, the government.
Right.
You can short Bitcoin as much as you want. There is no check and balance. So trading Bitcoin against dollars, it is a situation we have right now, but I don't think it's a good thing long term.
Interesting.
It's better to trade Bitcoin against a commodity stable with some assurances. And with a private company, you're always going to have better assurances than with a central bank, simply because they don't want these guys to go crazy. So they're going to monitor and regulate that very carefully.
It's a great point. And to double back to another point I resonated with a lot from a second ago is that once you control the regulators, or you are the regulator, right? We could say that that's true of CBDCs, right? Regulation comes from government agencies. Once money is it's largely, but once it's completely controlled by government agencies, well, guess who's no longer beholden to regulation, right? And so that's the point you're making of like the advantage of regulatory beholden private companies managing this money. They have some form of accountability.
Yeah.
There's some form of attestation required. There's a whole different level of darkness and obscurity when the regulators are underneath the thumb of the money printer, It's like the difference between going to the DMV, where you have absolutely no recourse, and you're going to be stuck there for 3 hours, and they don't give a fuck. Like, they're going to be an asshole to you. They're going to tell you got to go back to your car for a check because you forgot it, and you're back to the back of the line, versus Chase Bank, which also sucks, but there's some semblance of customer service there. Like, they're not going to completely bone you. They're going to give you a half bone at Chase. It's just the anecdote that comes to mind thinking about how this would work in the end.
Yeah. But it's kind of ironic, right? You have the legacy system, which can basically do whatever they want. And then you have private companies, tokenizing things like dollars and gold, but they have a higher standard than the people that oversee them. Yeah.
It's ironic. To shift gears a touch, we started with stablecoins and all that because it's top of mind, but we want to get to where you're at currently at Jan3. To do that, though, I think for those that aren't familiar in the audience, why don't you give us sort of the spark notes of your career trajectory and your Bitcoin trajectory and where it's led you to where you're at today, if you don't mind.
Sure. So I guess I first read about Bitcoin in 2013, and I've seen it before that, but I really dug into it in 2013, researching about how to mine Bitcoin. And then usually I give my start date in the Bitcoin industry is late 2014, early 2015. That was around the time I started joining BTC China as an advisor, and then I became the COO. And I think a lot of people may not know, but BTC China was one of the biggest exchanges and mining pools back in the day. So after Mt. Gox exploded or imploded, everyone went to trade on BTC China, and we were also one of the biggest pools in the market with about 18% of network hash rate. And that was actually quite important back then when all the miners were trying to say upgrade to, Bitcoin Classic, Bitcoin XT, SegWit 2X, et cetera, et cetera.
Mm-hmm. So then, walk us into then Blockstream transition, and then from Blockstream to Jan3, if you don't mind.
Sure. So after BTC China, I joined Blockstream. It was towards the tail end of the scaling wars or block size wars, I guess. But I realized that there were some things that we need to build to augment Bitcoin, to make Bitcoin more resilient. So a number of projects like moving some mining out of China, which turned out to be a pretty good idea. So I helped Adam boot up the mining division at Blockstream, building things like the Blockstream Explorer, and then an evolution of that is the mempool.space Explorer. But there was a number of explorers in the past, and I think those were a big strategic risk to Bitcoin, because they could have just said, Bcash is the real Bitcoin and serve up Bcash data. Like if you look at all the major block explorers, they were all run by the big block companies. So Blockchain Info, BTC.com, which was controlled by Bitmain, and a number of others, but they were all basically on the big block side. And if they were really all in and wanted to use that as an attack mechanism, I think would have been a very effective one, because most people look at block explorers to derive what is the real Bitcoin chain.
Yeah.
Unfortunately.
Yeah.
Also, Blockstream was investing heavily in Lightning. I think they started R&D on Lightning in 2015, so that was a big draw. And then I wanted to launch the Liquid network too. That's a Bitcoin sidechain, and it also helps to make Bitcoin more accessible to the world. So yeah, that was largely why I was drawn to join Blockstream. I wanted to work on Bitcoin infrastructure and get a number of things launched to basically make Bitcoin more resilient against attacks. So I stayed at Blockchain for about 5 years, and then earlier this year I decided to start a new company called Jan3. And Jan3's goal is to get Bitcoin into the hands of more people around the world. The mission is to accelerate hyperbitcoinization. So I want to focus on our wallet, which is Aqua. That's another project that was started at Blockstream, but it's a Bitcoin and stablecoin wallet. And basically try to get that into the hands of people around the world, and specifically in Latin America, places that have a natural draw to stablecoins. I believe that Bitcoin wallets in general have lost a lot of ground to the shitcoin chains, because they've all offered stablecoins from day one, whereas none of us in Bitcoin land have that. So that's one thing I want to change. So we do have Tether issued on Liquid, and basically the view I want to present is, here's a Bitcoin wallet and here's a stablecoin, and we'll let you receive deposits and send to other chains. So we've integrated SideShift to do that. So even if like someone wanted to pay you with Tron Tether, you can still receive it, but you'll keep your balance in Liquid. Same for like any liquid asset. But if you want to send out, same thing, we'll shift it out again to pay someone in like another chain. But the idea is that we want to kind of be a central hub for your asset storage. So you store your Bitcoin, you store your liquid assets, but you can receive and send and interoperate with anything.
Samson, if we could step back for 1 second, and it's my understanding that you lived in China for 10 years. Is that correct? So yeah. I'm curious. So you've lived in Canada for the formative years of your life up until you moved to China. Could you give us a quick contrast comparison between living in the West versus living in China? And then during that 10-year period, did you see a noticeable shift in the CCP or how China was kind of run, or did it seem like the CCP was clamping down more towards the end? I really just want to get your feel for what was it like living there, and how different is it from living in the West in your experience?
Well, it's very different. I mean, things happened very quickly in China. And I would say over the last probably 5 years after I left, China has changed a lot.
Yeah.
Back when I was in China, this was like 2009, I think, when I moved there. China was in a rapid growth and development stage, and it was very much open for business. And I think the 2009 and probably a few years preceding that were probably like the best years. And it was very capitalist. But then things have changed a lot, especially with the pandemic of late. And things have just gotten very dark, and I don't know if people want to live there. Like, people are actually leaving now. And
yeah, it's scary to see things like Jack Ma got disappeared for, I don't know, what was it, a month or two, and then reappeared and had his tune completely changed, and obviously had the shit scared out of him. Who knows, what they did or what they told him. But they obviously told him, you better shut your mouth and get in line, or you're going to get disappeared forever or something. Yeah, but it's scary stuff.
Yeah, but you could kind of see things were going that direction with the crackdown on the exchanges. And this was back in probably 2016 was when we first started experiencing it. I didn't think that they would actually shut down all the major exchanges, because that's probably their best way for them to to have like Bitcoin in China, right?
Right.
Chinese people in general like hard assets. They like real estate, they like gold, and they like Bitcoin. And there's going to be people still trying to get Bitcoin. And the best way, if you want to maintain oversight of that, is to work with the big exchanges. And we already had all the KYC and AML policies in place, and we're collaborating with law enforcement. So you kind of had all the infrastructure already. And by shutting it down, you kind of push everything into peer-to-peer markets and like local Bitcoin style type trades, which I would say is not as clean as doing it with an exchange if you're the government. But the writing was on the wall then. So they've cracked down a number of times, first on the exchanges and then on mining. So the China today is very different from back then. And I would say it's not as nice to live in.
Yeah, it's unfortunate.
Did the mining migration surprise you? Like, you talk about being surprised that they cracked down on exchanges. The draconian nature of the mining crackdown maybe even takes that up further. Did that surprise you? Do you view it as a massive I mean, I'm sure you view it as a misstep on their end, but walk us through your perception of that.
Well, I think I've tweeted like, there's no way they're going to shut down the exchanges. And I was wrong, obviously. But once they did crack down on the exchanges, I knew mining was going to be the next one. Because what it comes down to is it's all about capital controls, right? So China has capital controls. South Korea has capital controls. Certain other countries have it too. If you want to maintain capital controls, you have to crack down on Bitcoin. So you can go one of two ways. Either you open up the economy and you acknowledge that Bitcoin is money is information, and there's no way to control it, or you crack down, like basically zero COVID policy. You're going to have to crack down, and you're going to have to crack down hard. And mining is effectively buying Bitcoin, but buying Bitcoin with electricity. So you can still bypass capital controls by mining, right? And if they were going to crack down on exchanges, then the next logical step is to crack down on the mining too.
Yeah, that was wild, man. I mean, I know we're all used to it, but watching hash rate do what it did, it blew me away. I did not, especially with how many different times it felt like China was kind of bluffing, like, okay, we're going to do this, and then they don't. We're going to do this, and then they don't. That really blew me away. And I think at the end of the day, this is going back a year, a really obvious statement, but really hardened my conviction in the resiliency of the network. Watching this thing recuperate and disperse and then just keep on humming and regrow was truly mind-blowing. Let's take a quick break and hear from our show sponsors. BCB is brought to you by Crowd Health. With open enrollment upon us, what if you didn't have to pay healthcare premiums anymore? What if you could invest in Bitcoin instead? With Crowd Health, you can put money aside for health expenses in your own account and even hold a large part of it in Bitcoin. If Bitcoin goes up, you get the upside, not big insurance companies. Pay one low monthly total to fund an account that is yours. Choose your doctors and hold up to 75% of the funds in Bitcoin. If a large expense comes up, CrowdHealth will crowdfund the bill for you to pay it quickly. Stop supporting the broken health insurance system with your hard-earned capital. Go to joincrowdhealth.com and use code BLUE now to experience freedom from health insurance by utilizing Bitcoin. Right now, through the end of the year, you can get your first 6 months for just $99 per month. Don't get stuck in a bad insurance plan again. Instead, go to joincrowdhealth.com and use code BLUE to sign up. That's joincrowdhealth.com, promo code BLUE. CrowdHealth is not health insurance. It's a totally different way of paying for healthcare. Terms and conditions apply.
Blue Collar Bitcoin is sponsored by Capital Logistics. Capital Logistics is a freight broker connecting truck drivers and shipping partners around North America. A true blue-collar business that supports Blue Collar Bitcoin. Capital Logistics specializes in moving temperature-controlled cargo, food, supplies, and other freight nationwide for some of America's largest companies. Capital Logistics is a firm believer that people and businesses should be able to save what they earn without having their purchasing power manipulated by the financial system. As early adopters of innovative systems throughout their business, Capital's excess cash flow is put into Bitcoin every month. If you want to work with a company that shares blue-collar values and an affinity for Bitcoin, reach out to Capital Logistics today. Find them online at capitallogisticsllc.com. That's capitallogisticsllc.com. Blue Collar Bitcoin podcast is sponsored by Ledin. From savings accounts to personal loans to even mortgages, Ledden's financial services enable Bitcoiners to experience the benefits of holding today without selling their Bitcoin. With recent events in the lending market, Ledden has demonstrated that their robust and transparent risk management strategy was the reliable approach. Ledden doesn't actively trade or invest in DeFi yield generation, and they've experienced zero losses as a result of their strategy. Ledden only supports Bitcoin and USDC, two of the highest quality, most liquid assets in the industry. They are also dedicated to transparency, and they are the first digital asset lending company to complete a proof of reserves attestation, which they re-verify every 6 months. With multilingual support on standby 24/7, Ledden is truly there to support customer needs. Go to ledden.io, that's LEDN.io, for more details, and by visiting start.ledden.io/blue collar Bitcoin, you can receive $10 USDC for creating and funding an account.
The Blue Collar Bitcoin podcast is powered by arguably the most legendary company in Bitcoin, CoinKite. Use promo code BCB for 5% off select purchases, including the cold card, at coinkite.com. Established block 141,000, CoinKite is an industry leader in security and hardware manufacturing. They are producers of the renowned Cold Card, the world's most trusted and secure Bitcoin signing device or hardware wallet. It's built with a plethora of features fit for Bitcoin beginners all the way up to the most advanced of users. This device is a one-stop shop for your Bitcoin custody needs. CoinKite also manufactures the Block Lock, a gorgeous e-ink digital art display piece sitting in the background of every serious Bitcoiner on planet Earth. Block Clock can be programmed to scroll through key Bitcoin metrics including price, hash rate, the next halving date, and much more. CoinKite are also the makers of the Open Dime, a small USB stick that allows you to spend Bitcoin like a dollar bill, passing it along multiple times. Check out CoinKite's entire suite of products at coinkite.com. Now back to the show.
Yeah, I mean, all of these attacks are good for Bitcoin in the end because they show Bitcoin can recover from them. So it discourages the same attack. You might get new ones, but at least the same attacks are not going to keep on happening. But I don't think that they were trying to kill Bitcoin. They're trying to maintain their capital controls. Right. So they got what they wanted, which is no more mining, at least a lot less mining. There's still mining going on, but it's going to be the miners that no one knows about, right? Yeah. And it's kind of ironic. Like the miners that wanted to be compliant and register and pay taxes are the ones that got the boot, and the ones that were operating in the shadows are still going.
Are still rolling.
So,
badass.
That's a good lesson, yeah.
There's a ton of irony everywhere you look in the Bitcoin world.
Yeah. There are some badasses mining Bitcoin in China right now. Props to you, if any of you are listening. Speaking of resiliency, I want to talk about the block size war. You played a big ass role, my friend. We could knight you a block size war hero on this show. You really did. You were resilient under a lot of meaningful duress, especially going back, studying some of, people calling for you to get booted and you being on the opposite side of most of all the power and big money in this space. I guess give us a quick rundown of what happened for somebody that maybe doesn't know, and then kind of what that felt like and what role you played in defense of the protocol.
Yeah, so this was basically, as you said, every crypto and Bitcoin company was trying to force this upgrade. So you had Bitmain, Coinbase, pretty much everybody. And I was one of the only people at a big company that stood up and says, this is not a good idea. And because we did have a lot of hash rate, BTC China had a very big outsized voice in the debate because we said we're going to go with SegWit. This is the 2 megabyte increase is not going to work, and it's a bad idea for a number of reasons. And you're basically corrupting the protocol because you're changing the rules. So yeah, but standing up against these guys was not easy because they were contacting Bobby, the CEO, and they were going directly to our investors like Lightspeed and other board members, like writing emails saying this guy should be fired. And
what is your take on that, though? Do you think, because I guess I could see either side, because not that I would be a big blocker. Back at the time, I think I had no real idea of which side to take because I was so naive to the space. I was just like, oh, Bitcoin and Ethereum are, cryptocurrencies. I didn't know shit back then. But what I'm asking is, for some people that are more tech savvy, they read probably in January 2016 when the Lightning paper came out. They probably had some better understanding of how the scaling happens off chain. Maybe I think it would be pretty easy back in the day, back in 2017, if you were quite naive. Even some of the people in positions of power probably didn't realize, and this is just giving them some leeway, that, well, obviously the most rational way for Bitcoin to scale is to make the blocks bigger, thereby more transactions going to each block. And that makes total logical sense. Yeah. If you didn't read all the forums back in 2014 and you didn't understand Lightning and you didn't understand how most protocols develop in layers, as I think most people in the space understand very, very well today. Do you think maybe your position was based in the fact that you're more tech savvy than most, or do you accrue more maliciousness to the other side of the debate?
It's probably a mix of both. There was definitely a malicious element there, but then a lot of people didn't understand, like you're saying. A lot of things in Bitcoin are very counterintuitive, right? It makes sense. Like, okay, we want more transactions. Let's go bigger. But you're changing the consensus rules, and that's a bad thing. So I would say it's like 50-50. Probably some people had no idea, and they're just trying to...
All right, let's go down. Let's roll call people down the list. Malicious or stupid?
We just name names, hundreds of names. Yeah.
Yeah, but I mean, I fell into that camp too. So originally, I think there's a piece on Bitcoin Magazine where I said, we should scale Bitcoin because fees going up are a bad thing right now, or something like that. But then I talked to Adam back, and he helped explain a lot of the counterintuitive points. So I'm not immune to it, right? Like at the outset, I thought, yeah, it makes sense. We should not have fees going so far up that we're going to limit the growth of Bitcoin. And, that's why I can't really fault some of these guys. They probably just wanted to be helpful. But, you're not being helpful if you're attacking and trying to corrupt the network. So it's a mixed bag.
Yeah, and it's also a manifestation of Bitcoin's low time preference. Like you follow the incentives on a lot of these different organizations that supported a block size increase. The increase in throughput, the reduction of fees was, directly equated to the expansion of their pocket based on the, product they were providing. So in that sense, you can understand their position. I think as that war has concluded and more people understand the resiliency of the base layer, people are aware that we're not playing a game that lasts a couple years, 5 years. We're playing a decades or centuries long ball game, and that base layer needs to be ironclad. And that means that some quote unquote innovation needs to be deferred or needs to happen slower, more carefully, which is very counterintuitive. And it's part of the reason why so much of shitcoin land has put the cart in front of the horse. Like you can, if you're being nice, you can understand that from like a venture capital standpoint, like Bitcoin is slow. It doesn't break things. It's methodical, and it's hard to, in some senses, it's hard to make money quickly on, you could say. Harder to scam on if you're being more mean, Yeah.
But if you look at a lot of these guys, they're basically shitcoiners that were into Bitcoin. Like if you look at who was on the other side, the big blockers, most of them are just shitcoiners now. Like Brian Armstrong is probably the best example, right? So, yeah. I mean, what they really want is something that is malleable and they can use to make money. They don't care if it's Bitcoin or Ethereum or Dogecoin or whatever. They just want something to get rich off quickly. So in a way, it was a good split, right? We kind of fought the battle out and they lost, and then they went to shitcoinery, and they're still doing it now. But if you look at how they're doing, I think you can look at Brian Armstrong again as an example, right? Coinbase is not doing well. Like they missed their revenue targets. They're bleeding money like crazy. I think another one is Jeremy Allaire, right? Like he went on to do USDC, but at some point he said, no one's going to use Bitcoin in 10 years. But I don't think they're doing that well either. They're also bleeding a lot of cash. But all these guys are not doing very well.
In Coinbase's case, I don't know if you guys get the same intonation when you see Coinbase. I always think they've got the same brand as Facebook. Like it just on that, it just bothers me because everyone hates Facebook. So it just automatically, the hate just gets transferred to Coinbase. Maybe it's a good thing for all of us that Coinbase looks a lot like Facebook. Samson.
Well, they've also done a lot of things that would make people hate them too. Like they acquired the company that did spyware, and there's tons of stuff they've done.
Yeah, they suck. I completely agree.
I mean,
let's move on to nation state adoption here. I really want to talk and pick your brain about this, and as far as we can reach into your brain about it, as far as you'll let us with what you know about who's on the edge of this hook right now and who isn't. But how is this going? You left Blockstream because you decided that nation state adoption was the most important thing that you could be working on right now. And I think we would all agree, and we're glad we have someone of your caliber that's working on something that important. How is this being received by leaders that you're speaking to? And how is the IMF leveraging those leaders against you is really a question I'd like to get to.
Well, I haven't had any run-ins with the IMF yet, but it's the
they haven't put a bag over your head
coming.
And drag you through a yeah. When you get disappeared, we'll know who to look at.
Yeah. I've said again and again, like for the record, I'm not suicidal or anything. I'm very happy with my life.
All right, we'll put that on record.
He's on the record here, folks.
But yeah, like nation state adoption is going to be slow and arduous. We do have some wins. So Madeira is interested in adopting Bitcoin in their own way, and they've recently announced that they set up an NGO called Free Madeira, and that's to advise the government on how to adopt Bitcoin and how to roll out more Bitcoin-related services and offerings in the region. You have Lugano, a city in Switzerland that is adopting Bitcoin, and there's potentially more, but there is also headwinds too. Well, there's I don't know, but we're engaged in a lot of different places. So we're talking to people in Guatemala recently in the Plan B forum. One of the front leading politicians that is running for president delivered an announcement during one of our panels there, but she didn't say the word Bitcoin, but obviously it's about Bitcoin. She knows about Bitcoin because she made a video for a Bitcoin conference. And we plan to meet with her probably in this month, in November. I'm going down to Argentina for LetBitConf, and we have a number of meetings lined up with some politicians there. But overall, I would say the goal is not to immediately orange pill them. It's going to be a process, but the goal is to be engaging with the politicians and try to get them understanding what Bitcoin is.
How apprised are most of these politicians about what Bitcoin is versus what the rest of crypto is when you first meet them? Does it take a lot of coaxing to help them understand the difference, or is there some delineation in their mind before you start?
Well, it depends. Like if there is a grassroots initiative in the region, there's a bigger chance that they've been exposed to the Bitcoin versus crypto argument than if not. But I think it's just about keeping the doors open. So I was in Scotland for the Bitcoin UK conference last month, and I was on a panel with Dr. Lisa Cameron. She's heading up one of the kind of government policy groups that's engaging with Bitcoin and crypto. And basically, I was on stage with her in the panel, and I explained the difference between Bitcoin and crypto. So a lot of things are kind of like we're doing it as we go. I don't think necessarily everyone has that understanding right out the bat, but either engaging with them or being at a conference with them, these are opportunities for us to kind of educate on the fly. But it has to happen because there are so many forces trying to mix the two things together, right? Like there are FUD campaigns launched by the shitcoins like Ripple and their Clean Up the Code campaign that was $5 billion bribing Greenpeace. But there's just like tons of crypto companies out there saying, it's Bitcoin and crypto, we're best friends.
And Chris Larson, I forgot about that.
Yeah. Yeah, but they were Ripple was also in the UK at one of these parliamentary hearings too. So we just have to be out there and engaging as much as possible and basically educating them as we go.
It's funny hearing you talk about trying to orange pill nation states. It's so similar to orange pilling individuals and friends for the average Bitcoiner.
It is.
Like you saying the phrase keeping the door open. I said to my wife this week, it was Halloween. I was out drinking some beer, and I'm normally quite quiet about Bitcoin around people I don't know well. I'm not a proselytist or a thumper outside this pod that much, but there is a neighbor I do care about a lot, and he's a really smart dude. We talk about macro and finance, and I kind of peeled back the onion with him, and he's on a list of many people that show interest and then drop. You send him a couple resources, nothing comes back, and it's just a function of, we all have to remember how we entered the space. Like, when the thing is shiny, most of us were drawn in at that moment. Once you've been in for a while, you forget your origin story. The point I'm making here is that these people will come back. You know, we've lived through one cycle where we were talking about it ad nauseum when the price was parabolic. Then it cut off for several years. And then all of a sudden my phone started pinging when the price broke all-time highs and was in the 40s, 50s, 60s, right? Same thing's going to happen again. And I'm sure the same thing is going to happen with nation states. Like, until these stories play out as a success, right? Like, what if 8 years from now, the El Salvador move is just a smashing generational success? You're going to have a lot of people salivating. The game theory is going to start playing out then. It's not going to play out when the price is down 70%, which requires a lot of patience. But that's where you're putting the work in. You're tilling the soil right now. The crops are probably going to grow in the future when more success stories ramp up and we start to really see that jurisdictional game theory and start to play out, you know?
Yeah. So I think the big takeaway was from China for myself, like, if you're not engaging and educating the government and politicians, you run the risk of very bad policies and, you know, potential crackdowns down the road. But if you can educate people, and even better, if you can align the incentives of a nation state with Bitcoin, then we're all in a better place. So one of the understated things in El Salvador really is that they are mining Bitcoin. A country is mining Bitcoin. And that's, I think that's a pretty good thing.
NBD, it's huge.
Yeah. If you look at the block size wars, you know that hash rate can be weaponized, right? So given that this is an attack vector, it's better that you have a lot of nation states mining Bitcoin and securing the network versus contemplating attacking the network or cracking down heavily. Because if they're in the Bitcoin ecosystem, if they're mining Bitcoin, they're securing the network, and they have Bitcoin in their national treasury, and they're accepting payments in Bitcoin, and a lot of people there are using Bitcoin, then it's less likely they'll turn on Bitcoin like China and say, get out and no more Bitcoin for you guys. So it's sort of a defensive measure, I would say. The educational mission is sort of an attempt to secure Bitcoin from bad regulation and bad policy down the road, and engaging with the regulators as much as we can, given that there's so much interference being done by the shitcoiners, I think is very important. So engaging with Dr. Lisa Cameron in the UK, I kind of outlined it for her on the panel, which is there's Bitcoin, and then there's crypto, and there's stablecoins. You can regulate stablecoins because obviously they're from a central issuer. You can regulate crypto because they're largely run by foundations and people that are basically doing a business. But you can't regulate Bitcoin because Bitcoin is just information. Nor should you regulate information, because once you attempt to regulate information, then basically you need a surveillance state, right? Like you need to monitor everyone's internet traffic. You need to see what people do. You have to go into their homes and see if they have a Trezor, Ledger, or Bitbox wallet somewhere, right? And that just gets really dark. So
it does.
It's better to steer things in the right direction, and being exposed to them or them being exposed to me is a good thing. So I was sitting with Dr. Lisa Cameron backstage giving an interview to a reporter, and I was just kind of outlining my thinking on CBDCs, and she overheard it. And then afterwards she came in and said, what you just told him is the opposite of this research paper that we had on CBDCs. So it's just being out there in the field and engaging, maybe steering things in a better direction. At least I hope.
Yeah. I think it absolutely is. And I think you're the right person to be doing it. The Volcano bond situation in El Salvador, that's something that's been kind of ruminating for quite some time. Would you have an update on that situation, or what? I know when you spoke to Saifedean, you said that, or one of the two of you said that there was going to be some law passed in El Salvador, maybe in the summertime, for digital paper, basically digital bonds. Was that law passed, and what is the impediment to the issuance of these bonds, as far as you know?
Well, there's two parts to this question. So first, yes, there is a digital securities law that they need to pass that would allow them to issue the Volcano bond. I think the holdup right now is that, well, there was a number of holdups, like the war in Ukraine, and then energy prices, and then the gang violence. And right now, the president, I believe, is trying to finish some pension reform, and then they'll get to the other laws. But it's not just the digital security laws that people are waiting for. We're still waiting for the law that would establish the jurisdiction of Bitcoin City and that special economic region. Immigration reform, so people could get their PR. I know some people in El Salvador, they've had to do visa runs out of the country because that law is not passed yet. So there's a lot of things that people are waiting for El Salvador, and the Bitcoin bond, the law that would enable the Bitcoin bonds, is one of those things. Now, as for if they can do the Bitcoin bond, I think I would need to go back and reevaluate the design, because when I first designed it, it was last summer, and the world has changed a lot since last summer. I'm not sure the economics would work, and I'm not sure all the design aspects would work. So the coupon was 6.5%, but now, based on
I need to be a tad higher now.
Yeah, I was talking to Greg Foss about that. I was thinking 12%. He was thinking 14%, but there needs to be some more analysis to be done. The world has just changed so much.
Sure has. Yeah,
that is wild that the yield would. It's going to need to double. Like, it's crazy in a span of less than a year.
What was the number that they proposed for an investor being able to get a second passport to from El Salvador? Do you remember?
It was 3 Bitcoin, and then, maybe that would be changed too. But there's a lot of variables that we need to look at, right? So mining difficulty is at an all-time high now. Profitability is
miners
low
are just getting murdered right now. Man, are they taking a bath?
So there's a number of things we need to look at to reevaluate the overall structure of the bonds, but the concept still works. We just have to figure out the numbers and see if the numbers work.
When that issuance does happen, I think that issuance, once other countries see that there's another alternative way to access money outside of the IMF and outside of the typical traditional ways that we get basically loan sharks financing us in order to come back and take our real property. I think that is going to have a very real movement of the needle as far as nation state adoption is concerned, especially in the third world. So I think that's a huge deal to get this thing off the ground, for sure.
Yeah, I think I was really looking forward to finishing the bonds issuance and raise, because then I can go to other places and say, look at El Salvador did this. Are you interested? But we have to wait some time before that.
I think the concept is worth having you explore more, because although this specific issuance is not complete and there's a lot of moving parts, this idea that is enabled by Bitcoin on Liquid, it has the potential to be an absolute to be a watershed moment in the way that a lot of nation states get access to capital. I mean, you talk about the way that a lot of these countries are under the thumb of the IMF, this being one of them, or the World Bank, this being one of the main ways that they procure capital. I sent this tweet earlier in the week, and it said, if you're perpetually in debt to someone, they control you. IMF and World Bank essentially keep nations in perpetual debt, controlling them. Hence El Salvador embarking on the Bitcoin Volcano bond. They want sovereignty, right? A lot of these quote unquote sovereign nation states don't have sovereignty. So let's zoom out on the concept of how this enables that from a lending and borrowing standpoint, and why is Bitcoin the thing that enables that, right? Because there could be someone that latches onto the concept and says, well, we could hatch that on whatchamacallit. Why is this idea so big? And then what specifically about Bitcoin and really Bitcoin only enables this to play out potentially?
Well, I guess a key part of the bond's design was you share the Bitcoin upside after a 5-year period. And after that 5-year mark, by all means and measures, Bitcoin should be up a lot. So you would actually have a very high yield, higher than the 6%, 6.5% that we had originally, or even if it's like up at 12 or 14, with a Bitcoin augmented yield, it could be 50, 60%. But this would be unheard of. And I think just Bitcoin's nature of absorbing monetary value, it means it's highly likely that this would happen. And that would definitely, like you guys were saying earlier, kick off a snowball or chain reaction where other countries want to adopt this instrument because it's now a way to pay off your debt, right? As you move into hyper-Bitcoinization, like, you want to be able to get rid of your debt and pay it off ideally. So doing the Bitcoin bond, having this Bitcoin in your treasury would allow you to do that. And I think that's a way out for a lot of these countries. And at the same time, you have a benefit too. So the concept of the Bitcoin bond is that there is a revenue generating activity. Right now, the design is for mining, right, but you could easily take that out and replace it with something else, like, I don't know, mining precious metals for solar cell batteries or whatever, car batteries, right? But there's a number of activities you could do that would enable you to pay off the coupon and keep that Bitcoin in your treasury.
Yeah. Well, and
Samson.
then you also like to essentially, the way I understand this bond, or I think what clicks for me here, and you can correct me if I'm off, but you need to procure the attention of people that want to lend, right? You're basically garnering the attention of a globally dispersed, diaspora of people with capital that have an interest in lending out that capital. And that's really only enabled long-term by a global, distributed, decentralized protocol that's garnering a lot of value, of which there really is only one. But you kind of have to go back to, like, where's the capital going to come from? How are they going to be underneath the thumb of one specific lender? And that's really, to me, what clicks about what makes this asset class potentially so unique, is that you have a cohort of people that hold this asset that maybe want yield in a different way or want to diversify in a different way. And you're able to get their attention to lend that money out, which is far easier said than done. To kind of click.
Yeah, I think it's a mix of that. It's probably also people that are seeking yield, right? Fixed income is a big thing, and people want low risk yield. And I think the structure of a Bitcoin bond is inherently low risk because you have this asset that is bound to appreciate over time, especially on long time frames, and then you have a revenue generating activity paired up with it. So I would say it's automatically far lower risk than the current bonds that are backed by absolutely nothing right now.
Right.
And if you look at the market, we're seeing that happen, right? So we're due for a paradigm shift where people would just look at a UK gilt or something and go, that's garbage. I don't want to buy that. I want to buy a Bitcoin bond that has a large chunk of Bitcoin behind it and some revenue generating activity that allows them to pay the coupon.
Just hearing the name gilt, it makes me think it's some currency out of like Final Fantasy VII or something. It doesn't sound like a real security that somebody would buy.
Let's talk about Infinite Fleet here while we're talking about. Give us.
Sure.
We'll close out with maybe some video game talk, because you've got a iron in that fire too. What's up there?
Yeah, so my background is actually game development, pre-Bitcoin. So when I joined BTC China, I actually had my game company Pixelmatic at the same time. We just happened to be in the same area in Shanghai. Basically, there's a stadium, and we're kitty corner from each other. So what I ended up doing was moving Pixelmatic into the same office tower as BTC China, so I could just walk between the two offices as I ran both companies. But Pixelmatic is building this MMO game called Infinite Fleet. It's a sci-fi strategy game. We're trying to do some innovative things on the Liquid network. So a lot of Bitcoiners probably think NFTs are a dirty word, but we do have NFTs in the game. They're the spaceships. And the game currency is also on Liquid. It's called INF, and it's issued on the Liquid chain. And the reason for that is because we wanted players to be able to do atomic swaps. So if you're not familiar, an atomic swap is basically a trade that happens all at once or not at all. So what I'm aiming to solve is some pain points for gamers, not necessarily relevant for Bitcoiners, but for gamers, if you want to trade on a secondary market, or if you have a the game currency that you want to sell, you basically have a lot of counterparty risk, right? You can either go to a website and then the seller will say, pay me in PayPal first, and then you can get, whatever, or items or whatnot, right? But there's always that counterparty risk. But by putting everything on Liquid, we kind of have fixed that. So players can trade atomically. When you earn the game currency, it is actually sent to a Liquid wallet that's built into the game client, is not in a database. So it's a non-custodial game currency. So we're trying to do some things with, quote unquote, blockchain tech. And I think there is room for bringing that to the gaming ecosystem, because gamers are already familiar with digital items. They're already familiar with virtual currencies and whatnot. So it seems to be a natural step. And the lore of the game is very Bitcoin influenced. So I'm trying to orange pill people very subtly through the lore of the game. So INF is actually the Bitcoin of the game universe. It stands for Interplanetary Networked Finance Token. And that is, it's like basically the Bitcoin in the game world. And there's a number of other things too. The nation states in the game are called citadels, and they're based off of foundational law and consensus. So in order for, let's say, a citadel to go to war, you have to have a supermajority deciding we're going to do this. So there's a lot of Bitcoin things in the fabric of the game, and that's just to try to see if people will understand it. Because one of the deficiencies I find in sci-fi games is they hand wave away a lot of the governance and the economic systems, right? It's just, it just works.
Yeah.
But I kind of wanted to dive it a bit deeper and build it up from, how Bitcoin would have impacted a civilization in the future.
Damn.
You guys ever think about maybe just every 24th frame, you just have a Bitcoin flash?
Yeah.
Just subliminally,
Just
like out of Fight Club.
People, hypnotize them. Yeah.
What is it?
Yeah.
That wasn't a dick I saw. No, that was a Bitcoin.
Good idea.
I mean, just throwing it out there in case you guys are looking for any ideas.
Take or
That
leave
is
the
really
feedback,
cool, though.
Samson. Just tossing it out there.
Yeah.
It does sound
I'll
like.
take it.
Is there any other games that are considering using the same, the INF token as well? Like there could almost be like a circular economy between games using that same currency.
Yeah, potentially. So Exordium is the publisher of the game, and this is the vehicle that is fundraising too. So there's also a security token also on Liquid too. So it's basically a 2 of 2 token on Liquid that is controlled with a whitelist. So accredited investors can trade it freely, and they can do it through a side swap too. So it's non-custodial. But that entity, the plan is that they would license other games, and the games that they license would also integrate, the same tech, the same Liquid tech, and potentially that could boot up a cross-game ecosystem.
Man, needless to say, Samson MOW is up to a lot of cool shit. This has been a blast. Give our audience a handoff to you in any capacity you prefer here, Samson, as we close.
Yeah, sorry, where to find me stuff? That? So I'm usually on Twitter. My handle is Excelion, EXCELLION. If you're interested in Jan3, our Twitter handle is @Jan3com. And if you're interested in Infinite Fleet, it's just @InfiniteFleet.
We'll check
Very
it out.
cool.
I need to find a new game to play.
Thanks, guys.
Yeah, we really enjoyed it, Samson. Thanks for your time.
Thank you.
Thank you. Talk next time.